Welcome back to this lesson, and in this lesson we'll be talking or discussing on buy stops. So these are orders that are residing above the current market price. So buy stops, another name for, or whatever you can use for buy stops, is just buy side liquidity, because it is liquidity or orders that are above current market price. So for example, an example of this is like here. So what I usually like to see before entering any market is for liquidity to be triggered. So what I mean by being triggered is, you see, like in this scenario, we see that there was a certain consolidation that occurred here at this specific time, and through this consolidation, when you see consolidation happening, know that there's building up of orders. So this scenario is the buy stops, they are being built up above the market price, and eventually the market will just have to run a particular liquidity or a particular side of the market before going to the other side. So we see that here the market consolidated, and eventually we ran these buy stops or this liquidity that was being built up here. Then eventually the market reversed and broke market structure, leaving imbalances. So actually this is what I would prefer to see in any market, that there is a form of building up of orders through consolidation, then eventually running it up, then reversing to the other side. And you can see how quickly the market broke structure or reversed to the other side and continued moving lower. So the consolidation may happen to go sideways like this, or it may also go upwards like this, like here, where it seems like we are moving higher, but eventually some form of liquidity is run, then a break in structure, and the cycle continues till we reach a certain discount array that the market is interested in, and this discount array is found in the higher time frame. You can see here that also there is a consolidation here, then we ran the stops, then eventually we broke the market structure. So after this, when this happens, or when you see the market consolidating or building up orders, then you should anticipate that the market will move to the other side of the market. So sometimes it may sometimes this buy side liquidity may be used as our target. So for example, if the market has hit a discount array at this area, we have these highs. So we know that these highs will be sought for in the market. So the buy side liquidity to look for will be these highs, and eventually the market will continue moving higher till we reach or we run all this buy side liquidity as it's seeking for higher prices. Yeah. So we continue moving higher and higher until eventually we reach the opposing target, then the market resumes in the opposing direction. So that's it for the buy stops, and you can go and exercise in the charts and look for examples where there's buy stops like here, to familiarize yourself with these concepts. So that's it for this lesson.